we're going to talk about the Berkshire Hathaway case. Our group is composed of me, Mirko Sempertei, and Guillermo Wolf, who's going to be talking later. So, Berkshire Hathaway Company, what is it? They're an American multinational holding company. What do I mean by holding company? It means that they don't sell or buy any products or services. Individuals form it for the purpose of purchasing or owning shares of a company. By holding a company, by holding a stock, the parent companies gain the right to influence and control business decisions. By doing this strategy, they came up to own a lot of companies, like to say Geico, Duracell, Dairy Queen, Fruit of the Loom, among others. Berkshire Hathaway Company is mostly known because of Warren Buffett, who's the CEO of the company. Since he came into the company, he made the company really successful. He is one of the richest people in the world, and many people look up to him financial wise as a mentor. Um, Berkshire Hathaway Company averaged a 19% increase on book value annually, when S&P 500 did only 9.7% increase. That means that they are doing more than double of what S&P increases each year. They are the eighth largest public company in the world, and they are the 10th largest conglomerate company by revenue in the world. What do I mean by conglomerate company? So these companies are basically companies that own many companies, like to say Unilever, P&G, PepsiCo. These are very well-known companies, and Berkshire has much more revenue than these well-known companies. So you get a sense of how big this is. They are also the largest financial service company by revenue in the world. So what is their strategy? Berkshire Hathaway strategy is in the value-based model. Warren Buffett has the belief that people should only invest in companies that exhibit solid fundamentals, strong earning power, and potential for growth. The strategy can be divided into four tenets. One would be management, financial measures, business, and value. What do I mean by management? It means that they look into the higher ups of the company to see if they reinvested the money to keep it growing, and also to see if they are not paying all the dividends to the shareholders, which means that they are a company more focused on the shareholder value. This is something that Warren Buffett isn't interested in. Financial measures. What does it mean? Buffett focuses on low-levered companies with high profit margins, but above all, he prices the importance of the economic value added calculation, which estimates a company's profit after the shareholder stake is removed from the equation. Business. Easy to analyze. He says that you should go into a company and buy the stocks in there only if you understand how the company works and you completely understand. He says that you shouldn't be complicating yourself by going to a company where you don't understand anything. And fourth, value. Something that gives a company a clear advantage over other and protects it against incursions of competition. Basically, it is that they look for a company where they have value, where they have something that distinguishes themselves from companies that are their competition. So, what is their investment objective? To buy a managed business in a whole or part that passes favorable and durable economic characteristics. Their goal is to maximize Berkshire's average annual rate of intrinsic value on a per share basis. I'm going to pass it on to Guillermo Wolf. Thank you very much.
Thank you, Mirko. First and foremost, the CEO of Berkshire Hathaway, Warren Buffett, main rule goes as, rule number 1, never lose money. Rule number 2, never forget rule number 1. He's referring to the mindset of a sensible investor. Don't be frivolous, don't gamble. It's very important to be informed and do your homework. Buffett invests only in company he thoroughly researches and understands. He doesn't go into an investment prepared to lose. You should never follow where the, as we call it nowadays, the hype is at, which means you should never make your own decisions based on what other people tell you, and you should make your own decisions on what you believe in. Buffett seeks out businesses that exhibit favorable long-term prospects. Another rule that they follow is that they focus on the value of the investment. So they usually like to invest in quality stocks at rock bottom prices. Lastly, they heavily focus on the time they hold on to stocks. Buffett says if you don't feel comfortable owning a stock for 10 years, you shouldn't own it for 10 minutes. It is very important to decide whether or not the investment will be long-term or short-term. So now I'm going to talk about the lessons that both Berkshire Hathaway and everyone else has learned since they began. It is important to look for companies that reinvest their earnings into their growth, meaning the companies that will take their revenues and put them back into the business to let it grow. Another important lesson is to not invest in businesses that are too complex to fully understand, meaning that we shouldn't invest in a company that has too many gray areas. Another lesson is that we should invest in unattractive companies that build products. Going with the hype is very risky move because they tend to become more volatile. So we must do our own research and choose companies that we believe in and not prioritize what everyone else believes in. Lastly, we should invest in asset-heavy companies. Asset-heavy companies tend to be very good investments, so it is important for us to be able to analyze that. Well, we believe that Berkshire Hathaway's investment strategy is truly based on the value of the stock and the company itself. You should never invest in a stock because of what your friends and family believe in, but what you yourself believe in. Focusing on the outside noise can lead to very risky and negative investments, as we have seen with all the so-called meme stocks. We also took away that before making any investments, we should ask ourselves simple questions such as, what does the company do? How do they reinvest their money? And why is this company different from everyone else? Understanding the fundamentals of a company is crucial because investing in companies that we don't understand fully just increases the risk in the investment itself. As we have seen lately, popular stocks are no longer popular as the stock market continues to struggle through this financial crisis. If we are to invest now, we have to make sure that. Thank you all for watching, and as always, go Bulls.